Hi, we're here to talk about the surprise acquisition of eSpeed by Nasdaq. And my name's Rhode. I'm an analyst at TABB Group, and this is Adam Sussman, Director of Research. Adam, we spent a lot of time thinking about merger acquisitions between exchanges, but now we see an exchange acquiring an interdealer brokers technology platform. What do you think that means?
Well, look, the last few years we've seen a number of failed mergers between exchanges across borders. Nasdaq has been a part of a couple of those failed mergers. Now, more recently, we've seen ICE and New York getting together, which, although there's some cross-border implications of that, you know, the two largest pieces of both exchanges are here in the U.S. So you see more of a regional play there with some global impacts. So I think this is similar. This is Nasdaq looking at U.S. capital markets and thinking to itself, how do I get a bigger piece of that pie? Now, in the past, they've gone after acquiring market share in U.S. equities. They bought iNet, Instinet, or Island. They bought Brute, only to see that market share evaporate quickly thereafter. So I think it makes sense that they're not revisiting that strategy. Instead, looking a little bit more broadly and thinking, how do we diversify our revenues away from U.S. equities and equity options, which is where the bulk of their transaction revenue comes from, and looking at fixed income.
So why, and particularly by addressing the interdealer broker space, then is that because they're challenged, that space is challenged? Do you think that's why they've?
Well, I think what's interesting is what's Nasdaq going to do with eSpeed now, right? So on the one hand, they could maintain the status quo, but more broad, or if you want to think a little bit more creatively, they could begin to break down that IDB business model and look for a truly more multilateral approach, meaning not just having dealers and market makers on that platform, but also allowing other market participants in as well.
Yeah, no, I totally agree with that. I mean, I think one of the things that we've been looking at from the swap execution facility space and how that changes the interdealer brokerage market, perhaps with more electronic trading pressures come to bear, that we still don't have any determination on the voice trading provision. But either way, we still see that there would be an uptake of more electronic trading in the derivative space. Now, obviously, this is a cash platform acquisition, but given the fact that interdealer brokers are looking at how they're going to transform themselves under the the Dodd-Frank mandate, perhaps Nasdaq realized there was an opportunity there.
To that point, if you're sitting at one of the interdealer brokers now, does this scare you? Does this transaction frighten you, or do you think it was always in the cards and you just wish you had sold your platform?
It's difficult to gauge what the level of commitment from the interdealer broker space is towards the financial services industry, the derivatives industry, the fixed income markets, by virtue of seeing a technology platform being sold. But that said, we still see that the interdealer brokerage space is a challenged environment, and I think it wouldn't.
So is the exchange space, right?
Correct, but it wouldn't take this acquisition or sale to make you be worried about that. You're already pretty aware of that.
Right.
So, what do you think then is going to be the response from other exchanges because of this Nasdaq move?
Well, look, I think you'd have to be an idiot not to recognize that there's going to be massive amounts of consolidation in this industry across, all of the market participants, be that exchanges, IDBs, brokers, market makers. It's going to happen. So I think that we are going to continue to see consolidation. The trick is, who's going to decide to pick up what asset and when. I don't necessarily see it as an exchange response. So, I don't see exchanges then going after, eSpeed's competitors, for example. I don't see that tit for tat. I don't see it playing out as a tit for tat. What I do see is that this will probably speed up the consolidation, that everyone who was looking to sell sees the valuation that eSpeed got and says, why wouldn't I try to get that same valuation now?
Right. I mean, I think from the way I see it as well, it's interesting to see Nasdaq approaching the cash space. They have a European offering, NLX, which is looking at long-term interest rate futures and short-term interest rate futures. But obviously, this is a treasury acquisition, while everyone else, a lot of the other exchanges and verticals have been focused on the derivatives change. It's going to be pretty, I think it might very well lead to an alternative approach towards fixed income trading, perhaps especially if they were to get Nasdaq, that is, to get another swaps related platform that would, you know, if you've gone in and developed strength in electronic treasuries, then to have the swaps alongside that, then you really open up a new market rather than going straight into swaps directly.
Right. That makes sense. I also think that, you know, if you look at most of the exchanges in other markets, particularly smaller markets, the exchanges either match or have subsidiaries that trade in across all the different asset classes. Now that's been missing here in the U.S., and I think that's what we're likely to, I think that's one of the forms that we're going to see in terms of consolidation. So a single exchange owning not just U.S. equities and equity options, but also cash treasuries now with Nasdaq, FX, particularly on the spot side, and corporate bonds. I could see all those cash products sitting under one parent umbrella.
Yeah, makes sense. I agree with that. Okay, well, I think we'll wrap it up there.
Yeah,
but
thanks.
Thank you very much, and thanks for listening.